Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 11th of June. Starting off with the FTSE 100, where the big question is whether we are still in that channel from back in January or we're not. Drawing the lines as I have done, we are still there, and we have the hope that the channel floor and the 50-day moving average 8160 now will join together to provide support for this market. Otherwise, we're looking for an end-of-day close to 8300, which at the moment seems rather difficult given the price action, and a return for the RSI above neutral 50 versus 45 at the moment. You can still see we've got that double failure at the old rising RSI trend line, which actually suggests that we've got a leading indicator signal on the downside. If we do break back below 8160, then the next level down would be towards the April peak there at 8060, which is, or would be, obviously rather painful, but given the political lay of the land and the uncertainty, perhaps not many people have a big impetus to go long of UK stocks. On to German stocks, and here you can see that we are trying to escape this rising trend channel from October. It's been a great run, so can't really complain. 50-day line there at 18,300, the first support, and then back down towards the 17,800 area, which is basically, or was, late April, early May support. RSI on the wrong side of 50 as well. We really need to break that resistance line there from May, 18,700 now, to snap the recent rolling over that the DAX has delivered. Moving on to the Dow, and here you can see that we've got a bit of a dance either side of the 50-day moving average. The blue line there, 38,700. We're above the floor of that rising trend channel from September, which is good news, and obviously still quite a long way away from the record highs here, as compared to the S&P, which actually had a new closing high, which was obviously very pleasant. 38,400 the floor of that channel, so ideally we stay above that. Otherwise, we might have to test April-May support towards 37,700. But it looks as though we'll stay within that channel, and all we need really is an end-of-day close through 39,000 to signal we're heading towards 40,000 and beyond. Best case would be up to 41,600 by the end of next month at the top of that channel. Moving on to Bitcoin, and here it's all about trying to break that line of resistance from back in March, which obviously we haven't done at the moment. In fact, we're going the other way. Looks as though we'll need a test of the 50-day line there at 65,600, and also even the floor of the rising trend channel there from back in November, the floor of the channel there around 65,000 as well. So ideally we hold 65,000, then have another attempt at breaking 72,000. And the March resistance line hopefully giving this market the chance of heading up towards the 85 to 90,000 area by the end of next month, although it has to be admitted that looks as though it's a long way away, and with the RSI below neutral 50 at 47, there is some work to be done there. Moving on to gold, and here you can see that we have managed to stay above the floor of that rising trend channel there. That is around the 2280 level. That's our sort of worst case scenario in terms of the downside, and also obviously the old May support. End of day close above the 50-day line, 2354, is required to get us back in gear for a move up to the 2600 area by the end of next month. If you're looking for a trigger point or a momentum trigger point, then that would be a break of that line there towards 2380, but still some work to do to get to that zone. Moving on to the stocks, and starting off with Avacta, which has moved to Peel Hunt, which is obviously very exciting for those who look at the city in that kind of way. The chart, though, is interesting for two reasons. One is that we've got this falling wedge there, which we've been in for what seems like ages. The top of the channel there around 41.5 pence, the bottom of that little wedge around 38 pence, so that's the mini range. The volatility has gone down. If you're a fan of the shares and looking for the upside, you could argue that that uptrend line in the RSI window could actually start pushing this stock up and at least give us a token move towards the 50-day line at 46 pence. We haven't been above that 50-day line this year, which is obviously quite an achievement. The last time was back in early December. So just a first hint that the shares might respond to that RSI divergence and break 41.5 and get back into the mid-40s. Worst case is that we have to test the 38 pence level. Moving on to a stock which doesn't have such issues at all, Afentra, which has gone from strength to strength. That rising trend channel there from last September doing its work. The top of the channel there now at 67 pence, which we're looking for hopefully by the end of this month. and that's valid while we stay above the recent support area, 57. So above 57, looking for 67, in fact 67 plus the way things are going, so it looks quite encouraging. Next up is one of the placing stocks of the day, AFC Energy, and here you can see that we had the shares hit the top of the channel, and then the powers that be decided to take advantage of the strength of the shares and deliver a placing. Has been noted by a follower of the stock that the directors don't have that much skin in the game, and so maybe they're slightly more amenable to raising money and diluting shareholders, but who knows? The current situation, though, is that we have just a fig leaf of support there from a July uptrend line, 14.75 pence. So hopefully the shares will hold that and then maybe head up towards the 200-day line at 17 pence. But one has to say that's probably the best case scenario for the shares at the moment. On to Beowulf Mining, and here, interesting turnaround with a U-shaped turnaround here, rising 50-day moving average. We gapped down twice back in February, and we've gapped up now, so that suggests that while we're above 0.77 recent neckline, or 0.75 recent neckline resistance, we could head up to at least fill the first gap there at 1.2 pence by the end of next month. So looking surprisingly encouraging there, and backed by an uptrend line in the RSI window, so lower lows for the end of April, but an uptrend line there nonetheless. Moving on to a stock which had a nice recovery of late. Looks as though we might have a second go now for CleanTech Lithium, bouncing off the rising 50-day moving average around 18 pence above that. Looking for 30 pence in the top of that February trend channel by the end of next month. Obviously, it's early days yet, and we really want to stay above that 17, 18 pence recent support, which was also February resistance. Moving on to Corcel, and here you can see that we've had a little rebound, which we were hoping for. The rebound delivered by a break of that neckline there around 0.17. Above that, we're looking for the shares to head up to as high as 0.32 in the 50-day moving average, and also late May resistance for the shares. But the key here is staying above recent 0.15 support. On to one of the best movers of the year to date, best IPOs, I suppose, of last year as well. Golden Metal Resources, almost news every day now. A second gap to the upside. We were looking for up to 31 pence by the end of, this month actually, and it looks as though we might get that well ahead of time. And the upside value while we hold above 23 pence, the initial June peak for the shares. So it looks as though we've got a few more pence of upside at the very least coming up at Golden Metal. Greenroc is a requested stock, and here you can see that it might be a good idea. We've got this breakout after a bear trap gap reversal that we had in April. Breaking line of resistance there from November, and the top of that triangle there from November as high as 3 pence, which we're looking for hopefully by the end of this month. You can see there's a gap to fill there up to 3.33 pence, which hopefully would happen relatively soon as well. On to Helium 1, where the rug has been pulled with the £8 million placing. One has to say that we were slightly warned of that, because there was a broken line there from back in January. That was broken around 1.17 pence, and a couple of days of drift after that. Just a chance of again, a bit like AFC, just a chance of a bounce off that line there. In this case, late January support line there, running through the low of the day, which is 0.52. Above that, we've got a chance, I suppose, of heading back towards the 80s or 90s as a best case scenario, but let's see if the shares can deliver the goods. Better situation, which is obviously being helped massively by the rise in Golden Metal, because obviously it's a big shareholder. Power Metal, here you can see a V-shaped bull flag breakout through 19.5 pence. We've been looking for 27 or 28 pence by the end of next month, and the way things are going, we might even get that by the end of this month, backed by the golden cross that we've had just last week on Power Metal. On to Phoenix Copper, where it's a bit surprising the shares haven't risen much more given the $80 million copper bond, but rising trend channel here from back in March, top of the channel there at 36 pence. Looking for that by the end of next month, while we remain above the floor of the channel around the 22 pence area. I can see the 50 and 200 day lines coming close together as well, which is adding a bit of positive momentum. Staffline is next, a chart which is too good to resist. Here we've got a rising trend channel from back in November. Top of the channel there, heading towards the 49 pence level, which we're looking for probably as soon as the end of this month after the latest unfilled gap to the upside. And ideally we stay above the 36 pence level, initial June resistance in the meantime. A bigger stock than we normally look at here, Team Internet, nearly £500 million value. It could be a UK unicorn, because we like those, don't we, really? Here we've got a rising trend channel from back in March. Top of the channel there, heading for £2.40, and that's valid while we stay above the recent support area, which is called an end-of-day close back below £1.93. Looking for 240 by the end of next month on that particular stock. Finishing off with Zoo Digital, and here just breaking that falling trend channel there from the end of October. That was around the 60 pence level. Above that, we're looking for the top of a triangle from back in the autumn, and that is heading as high as 87 or 88 pence. And we're assuming that could happen even as soon as the end of next month. The reason for being so bullish about it is the way that the setup here is a Bear Trap Island reversal, gapping down there in January and gapping up in March, and that tends to be one of the strongest signals around, especially when there's another gap there unfilled back in the early part of May. That's it for me today. More updates tomorrow.